Dave Schurman from FirstOntario Credit Union is here to answer your questions for Finance Friday. And Dave, we've got 3 great questions, so we're going to get right into it. Perfect. The first one is about TFSAs. And Oski, guy who wants to be known as Oski from Dundas, he wants to know how the government determines the maximum allowable amount that he can deposit for the upcoming year.
Well, great question, Oski. Good to get questions from Tiger Cat fans. And quite simply, the government makes the rules. So since 2009, when the TFSA was first introduced by the government, they've changed the contribution limits a few times. It actually was $10,000 at one point. But I do have a chart that comes up there, a little tough to see. But you can see the last 4 years, the limit has been $6,000. And the government set it at $6,000 plus the rate of inflation, rounded up to the next $500. But since there's been really no inflation up till this year, the limit has stayed at $6,000. This year now, it's in 2023, it's increasing to $6,500. But the key is over on the far column, the cumulative limit. One of the great features of TFSA is you never lose that contribution room. So it adds up and accumulates. And you can see over there, up to this year, $81,500 you have room to put into a TFSA if you haven't already. And January 1st, another $6,500, that's up to $88,000. So, you know, if you've got a couple, that's almost $200,000 now you can put in a tax-free savings account.
If you haven't before.
Absolutely.
Yeah.
So January 1st, the new limit's coming up.
Okay. Our second question is from Dave in St. Catharines, who has parents in his early 80s with money in the bank gaining no interest. With the turbulent times we're going through with the markets, what's the safest, no-risk, high-interest option for their money that still gives them access with no penalties if they need it? And Dave adds he loves the show and he's been watching your advice for years.
Well, thank you very much, Dave. Very kind, and I'll try to not disappoint you on this advice. But there's really not a lot of low risk, no penalties, guaranteed. Generally, a higher return is based on a little bit of risk. Now, you talk about the turbulent markets. In fact, I heard this morning that the TSX is at its highest limit in the last 6 months. So the markets were down a lot early in the year, rebounded nicely towards the end of the year. So don't rule out a good, high-quality mutual fund. Savings rates, we complain about high interest on loans. But the flip side of that is you get great rates on savings. So you can get a savings rate now at 3.5, 3.75. That's not a bad option, no penalties. GICs, great rate right now as well. However, you will probably pay a penalty depending on how long you lock it in. So those are some options for your parents, Dave.
Okay, and finally, Karen from Linden has a question. Our vehicle's coming off lease, and we've decided that they want to buy it. Does it make sense to use our line of credit attached to our mortgage, or should we have a separate car loan account? Asking mainly because of the interest rates. Yeah, and great question, Karen. Interest rates are higher now for lending, the opposite of what we just talked about. It's actually a good idea to use your line of credit for a personal loan, like a car loan, if you're disciplined enough to pay it off. A lot of people will do the opposite. They'll use the line of credit for buying things, buying a car or other purchases, and all they'll do is pay the interest monthly on it. It's almost like you use it as a bank account. Exactly. Right? And what's going to happen is that car's not going to last forever, and by the time you need a new car, you're still going to owe the last car if you're only paying the interest monthly. So here's my tip. Let's use an example. Let's say you're paying $30,000 for that car off lease. Divide it by 60, which will give you $500 a month. That way, if you pay the interest plus $500 a month on your line of credit, the car will be paid off in 5 years. Then you can get a new car, and you won't owe anything on the old one. Because car dealers aren't really offering the incentives that they used to, where 0% financing, or you'd get a bonus if you went through their financing company, because they don't have to now, right? Because there's short supply. Even at that, there's a little bit of smoke and mirrors with car financing, because when you take the low rate, you're usually giving up a discount or a rebate. So there's no free lunch. You're going to pay it either way. Okay. Great questions that we have. And if you have a question or a financial topic that you want covered by Dave, email your questions to financefriday@firstontario.com or get in touch through Twitter at @finance_Friday. And if your question or your topic is covered on air here on Morning Live, you'll win a gift card from a local business in your community. Thanks very much, Dave. Just like Oski from Dundas did this morning. What will he get?